This is an analysis from Alpha Business Media. Today, we're going to deconstruct what is, without a doubt, the single largest untapped investment opportunity in Nepal right now, the mobile payment ecosystem.
To really wrap our heads around the scale here, let's start with just one number, 130%. That's the mobile phone penetration rate in Nepal. I mean, think about that. It suggests a market that isn't just ready, but is absolutely primed for a full-scale digital revolution. The hardware, the phones, they're already in everyone's hands. But here's the fascinating paradox. Despite all that connectivity, the huge majority of transactions, everything from buying your daily groceries to managing entire supply chains, they're still completely anchored in physical currency. So you've got this incredible digital potential, but the day-to-day reality on the ground, it's all cash. And that brings us to the core question we're going to tackle. Why does this huge gap between digital readiness and financial reality even exist? And, maybe more importantly for all the innovators and investors listening, where exactly are the most profitable ways to unlock what is clearly a massive waiting demand? You know, to really find the opportunity, we first have to figure out what's holding things back. Understanding why cash is still so dominant, that's the key to figuring out how to finally replace it. So, here's the thing. The biggest hurdle, it isn't the technology, it's psychology. For a massive part of the population, digital transactions bring up some very real fears. Fears of fraud, of technical glitches, and, maybe worst of all, the fear of having absolutely no recourse when something goes wrong. This quote just hits the nail on the head. A crumpled banknote is tangible and final. A digital confirmation is abstract and vulnerable. That sentiment really captures why physical money just feels more secure to so many people, in a way that, a line of code on a screen just doesn't, at least not yet. Overcoming that deep-seated feeling is challenge number one. Now, let's switch gears and look at it from the merchant side. For the small shopkeepers who really are the backbone of Nepal's economy, the resistance is all about practicality. First up, you've got cost. Those transaction fees, even if they're small, can eat away at already thin profit margins. Second, there's complexity. The whole idea of onboarding and learning new tech feels like a major operational headache. And third, there's the issue of formality. A digital trail creates a level of tax scrutiny that, well, let's just say some businesses have preferred to avoid. The value proposition to switch just isn't strong enough for them, yet. All right, so beyond just individual behavior, there are also some really critical gaps in the national infrastructure itself that are holding back widespread adoption. And I'm not just talking about having a good internet signal. See, infrastructure is so much more than just cables and cell towers. It's about the human element, the digital literacy, the basic skills, and just as important, the confidence people need to actually use these digital tools. And it's also about the physical network of cash-in, cash-out agents, or CICO. These are the local shops where people can easily turn their physical cash into a digital balance and then turn it back again. They are the essential bridges between the cash world and the digital world, and right now, both of those bridges are pretty incomplete. And then you have the regulatory environment. Now, the central bank has definitely created a framework, which is good for preventing chaos. But for a lot of innovators, it can feel less like a helpful roadmap and a lot more like a confusing maze. And these hurdles are pretty significant. For one, the licensing process is often just too difficult and expensive for a lean startup to manage. Two, you have transaction limits. Now, they're designed to reduce risk, but they also end up stifling larger business-to-business use cases. And maybe most critically, there isn't a true regulatory sandbox. A safe, controlled space where innovators can test new ideas with real customers without needing a full-blown, expensive license right from day one. That missing piece is a major roadblock for innovation. Okay, so we've clearly defined the challenges. Now we can pivot to what really matters, the solution. We've identified two really powerful and actually quite different investment strategies for capitalizing on this huge opportunity. The first, and maybe the most compelling approach, is what we call the Payments Plus model. The idea here is that the real value isn't in the tiny fee you make on a transaction. It's about using payments as a gateway to something much bigger. You start with processing payments, which generates incredibly valuable data. Then you leverage that data to do things like offer microloans. And finally, you integrate higher margin services like insurance or savings products, transforming a simple payment app into an absolutely essential financial platform. But the second thesis is much more focused. So while the Payments Plus model on the left goes after a broad consumer base, the second approach on the right, it targets very specific B2B supply chains. Think agriculture or construction. These solutions solve deep, painful operational problems, and in doing so, they embed themselves right into a business's core workflow. Their key asset isn't just data, it's what we call stickiness. They become so essential that they're incredibly difficult to replace. So the big question is, how do we actually get there? Realizing all this potential is going to take a coordinated, strategic effort from all the key players in this ecosystem. This is not something that's just going to happen by accident. For policymakers, the mission really has to be to shift from being a controller to being an enabler. That means launching that regulatory sandbox we talked about, streamlining the licensing process, creating smart tax incentives for small businesses to go digital, and leading a huge national campaign to build digital literacy and trust across the country. For investors, the message is clear. Look deeper. The real opportunity isn't in funding just another copycat payment wallet. It's in backing those companies with a clear Payments Plus vision, or the ones that have a really defensible B2B strategy. And it's also about funding the picks and shovels, the essential CCO networks and other bits of infrastructure that the entire ecosystem is going to be built on top of. And finally, for the entrepreneurs, the people who are actually going to build this future, your focus has to be on solving real problems for real people. That means being obsessed with your users, prioritizing radical simplicity in your design, and building trust through flawless, perfect execution every single time. The end goal? To create a service that is so good, so valuable, that going back to using cash feels totally unthinkable. So this all brings us to the final and most critical question. The challenges are clear, the strategies are defined, and the market is absolutely waiting. The race to build Nepal's digital financial future is officially on. And for those with the right vision and the right execution, the rewards are going to be nothing short of transformational.